Good to have you on the show. Thanks very much. We won't talk about the M&A, which is also being reported regarding your company. We'll not talk about that. We'll talk about the quarter gone by first. This quarter, you have hit the milestone of 1,000 crores quarterly sales. But that actually also increases a lot of expectation of the shareholder community. Tell us, how's the momentum looking? This is a very key milestone, but then you have the business heft now that from here on, the growth could be pretty meaningful.
So first of all, it's my pleasure. Good morning to the team at ET Now, and rightly shared. We are pleased to share that first time we have crossed a milestone of 1,000 crores, and the revenues are growing at 12%, healthy 12%. And the key highlight is not only the revenues are growing, but the gross margins have improved by 200 bips. Our gross margins are 66%, which according to the guidance that we would like to give, we should be able to maintain that gross margin guidance for the current coming 3 quarters. And the absolute EBITDA operating margins that we have been guiding between 26 to 28%, we could demonstrate and deliver 29% operating EBITDA margins for the quarter. This was all backed up by a solid performance that we delivered in India business, where we shied away delivering 600 crores revenue for the quarter, which grew at robust 22%. This was a mix of organic and inorganic. But if you look at organically also, we grew at 18% in India business, which is almost double than the Indian pharma market growth. And what we have been guiding in terms of what we want to do in India is to improve our share and adopt more and more number of patients in the chronic space, particularly in cardiology, that is hypertension, heart failure, and lipid-lowering agents. That is what is giving us more traction. And fortunately, some of the big brands, that is outside our top 4 big brands, Cilacar, Rantac, Metrogyl, and Nicardia, our other big brands, which is Sporolac, Razel, Asmada, all those brands are also gaining traction and momentum. And new products that we have launched are also contributing in a way of 3 to 4% to the growth. This is what is happening in India business. And we saw some softness in our rest of the world business, which we were expecting. Probably quarter 2, you will see a different trajectory in terms of growth in our rest of the world business, which will bounce back in a big way, particularly emerging markets, because that is how the order book is placed. And equally, there was some softness in the CDMO space. That should also start seeing the trajectory happening in the month of September onwards. That is how we are placed. And the guidance continues to be to grow at around mid-teens in India. And EBITDA margins should be between 26 to 28% for the rest of the year.
Right. So did you say that Q2 onwards, your global part of the portfolio will also see a strong fillip? Because some of your industry peers are talking very well on commentary, Lupin, for example, or some of the other CDMO players also this quarter not only gave good numbers, but have guided strong. So that end of the business, plus domestic, which is already doing well. So both engines could fire strongly in Q2 onwards is what you're saying, right?
Yeah, that is how we see overall the trajectory going at in Q2 and Q3. Because the way the CDMO business that we do, and earlier also I have shared on the channel, 80% of that business happens in the world of lozenges, and that is happening more in the era of cough and cold. And cough and cold season, the way we see trajectory of order book, the way we see season globally, and the climate change situations happening, which has been a discussion point globally. So September onwards, the order book, the demand starts coming in. That is how this business is placed. So our CDMO business is very different as compared to many other players that we have been talking. That is how we are placed. And for emerging markets where we are present in Sub-Saharan Africa, Latin America, Southeast Asia, and Middle East, there we are seeing trajectory for quarter 2 and quarter 3 to grow at around 12 to 14%. Also, I would like to share the key highlight of the business where we saw a good uptake was in our Russia business, particularly in our CIS countries where we have a distribution-based model. There also our supplies were very good for the quarter, and that also gave a good trajectory and propelled up our absolute EBITDA value. And also I'm happy to share that South Africa is a business where we have taken $20 million hit for last 5 quarters. Quarter 2 onwards, that business is also start showing growth, top line growth, and our absolute EBITDA margins will also show good increment in value quarter two onwards. So South Africa, Russia will start contributing in a way. Now rest of the world will contribute in quarter two and quarter three. And September onwards, we will see CDMO business going up. India will continue to deliver. India, we should be between close to around 190-200 crores for the month, and quarter we should be around 590-600 crores. That is what we have delivered for the quarter.
I wanted to also get in a sense from you as to how Rantac and Metrogyl have performed during the quarter. What is the outlook when it comes to the acute portfolio?
So Rantac overall, if you look at volume growth, is flat. That is how, but this is for absolute Rantac SKUs. But there are other SKUs within Ranitidine franchise, like Rantac syrup. There's a new version that we have launched, Randraft syrup, which is reflux anti-reflux suspension. That is also a new product which should contribute around 15 crore, $2 million revenue. That is in India business for the year, which is very good for us. Metrogyl, by the way, Metrogyl is showing high single-digit growth, and this year there was good demand. The demand continues to be there for Metrogyl. That is how we are placed for Rantac and Metrogyl. But within India space, overall, all the big franchises, that is Cilacar, Nicardia, Razel, Azmara, all of them are growing and growing better than the category, and they are gaining market share. And in March 24, we crossed 1,000 crore revenue for our chronic business. That is for our cardiology space. And we are the 8th ranked company today in cardiology and the fastest growing company in cardiology in the country. And the cardiology market is growing at around 14%, and we are growing at around 18%. And within this space, Cilacar, Cilnidipine as a franchisee, all different versions of Cilnidipine for diabetic hypertensive, for uncontrolled hypertension, for hypertension with renal disease, they continue to as a SKU, they continue to adopt more and more number of patients, and that is heartening for us.
Nikhil, before we let you go, and you can choose to answer it or not, but it is being reported that the companies on the block and a lot of other larger, bigger players are also looking at some kind of a partnerships with you. Can you share something? Is there due diligence on? You've been an acquirer of big brands, and you have grown this company, over the years. So how does it fit in a larger, much larger play? Does it look like a great fit? If you can share any color.
See, on market speculation and rumors, we don't comment, and that is as per company policy. But we would like to share that there are a good number of newer projects which are on. We invest close to around 100 crore plus in our capex or partnerships. We are engaging with more and more partners in the world of CDMO, and we continue to invest in the business. And this is how is a message to the external world as well as for the internal our employees, that we continue to invest in the business, and we are very much optimistic in taking JB to newer heights, and our journey from here is only onwards and upwards. That is what I can share at this moment of time.
No problem. I appreciate whatever you can share with us. But directionally, the sense is that the growth right now, on the one hand, in domestic market is very strong. In fact, many market participants want to latch on to this part of the pharma growth. The market is as large as anything else. But then the revival on the US is starting, pricing pressures are reducing, all of that. Which side is more lucrative for you as a company head to invest time and efforts and resources more on?
So we as a company have taken a call to invest in two big businesses. Obviously, there are other businesses where as and when required, we'll continue to invest. But today, if we look at in 2020, when KKR came in, India was contributing 45% of the revenue, and CDMO business was contributing 5% of the revenue. That is 50% of business was coming out of 1,600 crores. 800 crore business was coming from these two businesses, India and CDMO. India was 45% and CDMO was 5%. Today, India is contributing 53% of the revenue, and CDMO is contributing 12% of the revenue. From 50%, the contribution to overall revenue is 65%. So that is where we stand. And in the coming time, you will see India contributing to around 60% of the revenue, and CDMO should be contributing around 20% of the revenue. So India and CDMO are our big bets. We will continue to to invest in terms of how do you enhance the productivity in the field, launch new products, if there are any opportunities in the world of M&A, CDMO, partnering with newer partners, newer consumer big players. You will see us at some given time by the end of the year. Our branded lozenges will be available in US. Our immunity and wellness lozenge today is available in 4 countries in Europe, and by FY25 mid pan Europe, our lozenges would be available. Equally, we are working on some newer market projects for Brazil market, for Mexico market. So all those things continue to be there, and there's a huge effort which has been put in terms of newer projects, newer partnerships, newer way of drug delivery. We at some given time should be available in the CDMO space, in the world of throat spray for cough and cold. We should be available in stick pack. We should be available in unit liquid dose. So we are looking at newer and newer dosage forms which are more patient friendly in the coming time. So a lot of investments are happening in terms of what do our partners need and what are the new needs in terms of enhancing the patient compliance. So one part is India, where we'll continue to look at how do you increase your productivity with 2,000 plus medical reps and the portfolio that we have got. We are into all more progressive portfolio in the country. We are into cardiology. Within cardiology, we are into hypertension, heart failure, lipids. We have portfolio in the world of ophthalmology, pediatrics, probiotics. These all TS therapeutic segments are growing better than the market. That gives us confidence in terms of how we can deliver growth which is better than the market, improve our market share. By the way, from value perspective, today we are 21st ranked company in the country with 1.2% market share. But from prescription perspective, we are 15th ranked company, and we are in top 15 in prescribed company in the country. And within that, Rantac and Metrogyl are the 2 brands which feature in top 10 prescribed brands in the country. That is how deep penetration and concentration of JB is there in the country.